On this graph, we can actually see, this graph can be applied for many different other um, uh, type of percentile wage distributions. And you can see 10th, 25th, and 50th, and 75th and 90th percentile wages. And you can see how those percentile wages changes between 2000 and 2010. And here you can see how the wage rates change for different groups. 75th percentile wage, for example, has decreased. 90th percentile wage has decreased. The other percentile wages, I mean, the 50th has remained the same, and the bottom wages have increased. Remember, this is one profession only. And you can also see how the ratios of, for example, 90th percentile wage, this is a top group, and 50th percentile wage has changed. It has increased. The increase means, well, actually, this is interesting. 90th to 50th percentile wage has actually increased. That's actually interesting. 90 to 10 percentile wage has fallen. 50 to 10 percentile wage has fallen. So 90 percentile wage divided by the. No, actually, the ratio has decreased. There's a mistake here, probably, if I'm not missing anything. So all of them should actually decrease, but here the first one seems to have increased. But anyway, so looking at this, you can compare. I mean, Gini index is giving you overall index of inequality. These ratios gives you specific ratios between the high wage earners and medium wage earners, and low wage earners and medium wage earners, or high wage earners and low wage earners. And you can look to the extreme high wage earners, as extreme as you want, or relatively more moderate level high wage and low wage earners, like 25th percentile and 75th percentile. So this is an alternative way to measure the inequality. You can do it for wage, you can do it also for income or wealth also. You can get similar tables for wealth and income also. So, while measuring the inequality, there are some specific issues you should consider. But the first one is possibility of income mobility. You might have a society with which is not equal in terms of income, but part of that inequality might exist because people at their starting point of their life when they are young, they might be earning low income and they might have low wealth, while in time they might be increasing their wealth and income levels. And even if that's the case, I mean, this extreme inequality between different age groups can still be questioned. And as I have showed you, when there are some inequalities between the age groups. Partially, that might be because as you age, as you become older, you might be expected to get a higher wage. But the starting point income of different age groups might, in some cases, be also different. So not necessarily all the difference between the age group is the result of, the possibility of or the expected tendency of increased income as you got older. But that factor might play a role in the differences in income and wealth. So income mobility throughout the ages might be one thing that might be creating that might be accounting for partial inequality. The second thing is unit of recipients. I mean, same income, if it is given only to one person, is not that bad. It requires a certain living standards as a single person. As a single person, I am experiencing now. While when you have a larger family, in that case, the same income might not provide that kind of a high life standards. Of course, when we are talking on wage or income of a single person, maybe in certain families you might have multiple income earners, at least husband and wife. In some cases, also some elderly people or some relatively older children might do that. Um, but still, I mean, as when you have family household income level, the you can account whole household income level, connecting income of all people in the household, and still number of people in the family uh, who share that income will become important. Um, Even when you have multiple earners, you can just pull them, and then you should also take into account how many people share that income. And well, of course, there can be some people with special medical needs. Those things also change the life standards of people have with certain income level, especially when healthcare is not free. If healthcare is free, actually, and part that I mean the people who are who need special health treatments, the difference they create, or for example, people who have certain disabilities, the difference they create might relatively be less because the differences in necessary spending created by those people might be taken care by the state or by the organizations that are meeting those needs. Um, So this factor, unit of recipients, also creates a difference. In some cases, might be intensifying inequalities. Basically, um, if low income people are, I mean, in the low income households, the population is larger, or it might be decreasing the inequalities if the relative size of families with high income are larger. And well, I don't tell which one is the case. I don't have looked to the data actually. I can have some personal guesses, but if you are curious, you should look to it. I should not say it. And then there is taxation. Typically, the tax rates of the high income people are higher in most countries, not all countries, but most countries. But in some cases, there is this demand of flat tax rate, which means tax rate will be same for everyone. For example, 20%, 20%, 20%. Well, the sales tax is important. In some cases, if the people who are um, well buying uh, if the particular goods that are bought by low income households disproportionately more, or medium income households disproportionately more, are taxed more. For example, bread is taxed more than the caviar or yachts people buy. In that case, you might have taxation which still might favor, at least in that sense, favor the high income earners. Or, well, sometimes capital income, the income you got as profit, is taxed less than the wage income. In that case, I mean, if capital income is disproportionately earned more by high income households, in that case, this fact at least will favor them, basically. Um, but when tax rates favors relatively more the high income people, in that case, after tax income inequality will increase. If it is favors the low income people, in that case, the inequality will decrease after taxation is calculated. So when after tax income is looked on in the United States between 1979 to 2003, you can see that basically inequality after taxation has decreased. This is a Gini index, by the way. But you can see slightly, well, in 1980s, actually, on the graph there is no, you cannot see a decrease, but there was a slight decrease actually. But in 1990s, it is there is a more visible but still a small decrease in the after-tax inequality. But still, after-tax inequality is decreasing at significant degree. You can look at what happened after 2003, which will be an interesting thing for you to look upon. But I am continuing. So, what happened to the wage inequality? Well, unfortunately, the main description is for the United States, although you might ask what happened in other countries also based on these factors. I mean, which of them are true for whole world also. Basically, you can see 90th percentile wage divided to the median wage. So this is top to medium. This in United States it has increased up to 2010 to 2.2, 2.4 points. In other countries, in Japan it has remained fairly constant. In United Kingdom it has increased, not as much as United States, but it has still increased. In France it has again remained fairly constant. And this is medium wage divided to 10%, so medium to low. In United States, it has remained more or less constant after an initial increase. So actually, top group has earned, has benefited from in the United States. This is United Kingdom. It has slightly increased. In United Kingdom, actually, no, this is. In France, it has decreased. In Japan, it has remained more or less constant. So this ratio did not change that much, actually, throughout the same period. And this is okay. And this is again for all other countries. 10 percentile wage earnings to U.S. median, 50 percentile wage to U.S. median, and 90 percentile wage to U.S. median. You can see that, well, the highest 19 percentile wage earners is the United States. Although, well, if you look to the 10 percentile wage, many countries are much better than United States. Actually, all countries are better than United States. I mean, United States is not a good country for the 10 percentile low wage earners. It is a good country for high wage earners. It is also not so good. It is also relatively good country for the medium wage earners, although the advantage is relatively less compared with here 70%. Here it has fallen to 30%, and in some cases 10%. With when you compare with Australia and Canada, it is less than 10%. In United Kingdom, actually, the ratio is lower, but in United Kingdom, all ratios are relatively lower. Although, well, even in United Kingdom, 10 percentile wage is advantages. 10 percentile wage earners are advantages. So, what created these trends of inequality in wages? Well, we might look to educated and uneducated people, basically, but actually, this is comparing to some extent medium wage and low wage. But the major explanations are done by looking at this group. Maybe extremely educated people with really good degrees might have some advantages, but although in the very top level, something else might play a part, because even if you are Harvard graduate, I mean, that doesn't guarantee you go to the top. That just increases the possibility you might get to top 10% or above it. So there are different dimensions of it, but the book has focused to the inequality between skilled and unskilled people, and so that will be the focus here in this lecture. And usually, basically, between those groups also there is an trend of increasing inequality, and we will look different factors, demand, supply, and institutional factors that cause that increase in the next part.